Welcome to Thoughts on the Market. I'm Chiwoong Lee, Principal Global Economist at Morgan Stanley MUFG Securities.
And I'm Nakazawa, Japan Equity Strategist at Morgan Stanley MUFG Securities.
Today we are coming to you live from Morgan Stanley Japan Summit in Tokyo, and we will be sharing our views on Japan in the context of global economic growth. We will also focus on Japan's position vis-a-vis its two largest trading partners, the US and China. It's Tuesday, May 20th at 3 p.m. in Tokyo. Nakazawa-san, you and I both have been talking with a large number of clients here at the summit. Based on your conversations, what issues are most top of mind right now?
There are many inquiries about how to position because of the uncertainty in the US trade policy and the investment strategy for governance reform. These are both catalysts for Japan, and in Japan, there are multiple governance investment angles with increasing interest in the removal of parent-child listings, which is when a parent company and subsidiary company are both listed on an exchange. This reform will remove the subsidiaries, so clients are very focused on who will be the next candidate for the removal of a parent-child listing. And what are you hearing from clients on your side, Lisa?
I would say the most frequent questions we received were regarding the Trump administration's policies, of course. While the reciprocal tariffs have been somewhat relaxed compared to the initial announcements, they still remain very high. And there was a strong focus on their negative impact on the US economy and the global economy, including Japan. Of course, external demand is critical for Japanese economy, but when we pointed out the resilience of domestic demand, many investors seem to agree with that view.
How do investors' views scale with your outlook for the global economy over the rest of the year?
Well, there was broad consensus that tariffs and policy uncertainty are negatively affecting trade and investment activities across countries. In particular, there is concern about the impact on investment. As former Fed Chair Ben Bernanke wrote in his papers in the 1980s, uncertainty tends to delay investment decisions. However, I got the impression that views varied on just how sensitive investment behavior is to this uncertainty.
How significant are US tariffs on global economy, including Japan, both near-term and longer-term?
The negative effects on the global economy through trade and investment are certainly important, but the most critical issue is the impact on the US economy. Tariffs essentially act as a tax burden on US consumers and businesses. For example, in 2018, there was some impact on prices, but the more significant effect was on business production and employment. Now, with even higher tariff rates, the impact on inflation and economic activity is expected to be even greater. Given the inflationary pressures from tariffs, we believe the Fed will find it difficult to cut rates in 2025. On the other hand, once it becomes feasible, likely in 2026, we anticipate the Fed will need to implement substantial rate cuts. So, Nakazawa-san, how has the Japanese stock market reacted to US tariffs?
Investors' positioning has skewed sharply to domestic-oriented non-manufacturing sectors since the US government's announcement on reciprocal tariffs on April 2nd. Tariff talks with some nations have achieved some progress at this stage, spilling buybacks of export-oriented manufacturers' shares. However, the screening by our analysts of the cumulative surplus returns against Japan's Topics Index for around 500 stocks in their coverage universe, divided into stocks relatively vulnerable to tariff effects and those less impacted, finds a continued poor performance as a former. We believe it is important to enhance the portfolio's robustness by revising sector skews in accordance with any progress in the trade talks and adjusting long-short positioning with the sectors in line with the impact of the tariffs.
I see. You recently revised your topics in the target, right? Can you quickly walk us through your call?
Yes, of course. We recently revised down our base case topics target for end 2025 from 3,000 to 2,600. This revision was considered by several key factors. So first, our Japan economics team revised down its Japanese nominal growth forecast from 3.7% to 3.3%, reflecting implementation of reciprocal tariffs and lower growth forecasts for the US, China, and Europe. Second, our FX team lowered its dollar-yen target from 145 to 135 due to the risk of US hard data taking a marked turn for the worse. The timing aligns with growing uncertainty on the business environment, which may lead firms to manage cash allocation more cautiously. So this year might be a bit challenging for Japanese equities that I recommend staying defensive positioning with defensive non-manufacturing sectors overall. And given tariff risks, do you see a change in the Bank of Japan's rate path for the rest of the year?
Yeah, well, external demand is a very important driver of Japanese economy. Even if tariffs on Japan do not rise significantly, auto tariffs, for example, remain in place and cannot be ignored. The earnings deterioration among export-oriented companies, especially in the auto sector, will take time for the Bank of Japan to assess in terms of its impact on winter bonuses and next spring's wage growth. If trade negotiations between the US and countries including Japan make major progress by summer, a rate hike in the fall could be a risk scenario. However, our Japan team's base case is that the policy rate will remain unchanged through 2026. How is the Japanese yen faring relative to the US dollar, and how does it impact a Japanese stock market, Nakazawa-san?
I'd say dollar yen is not only driver for Japanese equities. Of course, dollar yen still plays a key role in earnings, as our regulation model suggests a 1% higher dollar yen lifting topics 0.5% on average. But this sensitivity has trended down over the past decade. A structural reason is that as value chain building close to final demand locations have lifted overseas production ratios, which implies continuous efforts now Japanese corporate optimizing global supply chain. That said, from sector allocation perspective, sectors showing greater resilience include domestic demand-driven sectors such as foods, construction and materials, IT and services, others, transportation and logistics and retails. And finally, the trade relationship between Japan and China is one of the largest trading partnerships in the world. Are US tariffs impacting this partnership in any way?
Well, that's a very difficult question, I have to say, but I think there are multiple angles to consider. Geopolitical risk remains to be a key focus, and in terms of the military alliance, Japan-US relationship have been intact. At the same time, Japan faces increased pressure to meet US demands. That said, Japan has been taking steps such as strengthening semiconductor manufacturing and increasing defense spending, so I believe there is a multifaceted evaluation which is necessary. That said, I think it's time to head back to the conference. Nakazawa-san, thanks for taking time to talk.
Great speaking with you, Lee-san.
And thanks for listening. If you enjoyed Thoughts on the Market, please leave us a review wherever you listen and share the podcast with a friend or colleague today.
The preceding content is informational only and based on information available when created. It is not an offer or solicitation, nor is it tax or legal advice. It does not consider your financial circumstances and objectives and may not be suitable for you.